Woo! We are back. Episode 31, True North, the investment grade podcast. And if you weren't aware, we got no Jeff today. So I am the captain now. And actually, I drew the short straw, and maybe we should air a little dirty laundry. But Tim said, hey, Soleil and I can co-host the podcast. And then he jumped on a plane and just left me holding the bag. So regular Bravo Foxtrot, that guy. But we love you, Tim. Next time. So I'm going to share my screen. We're going to do the same old. Try to do Jeffy proud. For anybody who is watching us for the first time, we got Grain, Mason, Dan, and Adrian, and Soleil. And let's just jump into the leverage tab. And as you can see, their leverage has been trending down. With the current price of Bitcoin at 107-ish today, they're only at a 13.2% leverage ratio. So there's plenty of room for them to add. And one of the things that I've been saying lately is that I suspected they were going to, maybe wait for Bitcoin to make some kind of move. And then IV would spike a little bit. They could get good convertible bond deals going. And then this IV would kind of spike as the leverage ratio increased. But with the preferreds ramping up, it's kind of makes me wonder if the preferreds are all we need from here going out. And even at like 2,000 Bitcoin a week, and then maybe if that ramped up to like 4,000 a week as the preferreds start to mature, that would still be about 3,000 Bitcoin a week for the next 26 weeks, which would be another 78,000 Bitcoin, which would put us at 670,000 Bitcoin, which is real darn close to some of the predictions that we made. I can't remember what everybody's predictions were, but that's kind of like right around where some of our guesses were landing. So what do you guys think? Are we just going with preferreds from now on, or are we going to see some of these convertible bond deals that we're used to seeing just hitting left and right?
Yes, Soleil. I'm echoing. Sorry.
Do you want to come back to you?
Yeah, let's stop sharing the screen and then I'll hop in.
Yeah, so Soleil, when Dan talks, put your microphone on mute, and maybe that'll stop the echo when he's talking.
Will do.
I think in regards to the converts versus the preferred, so there's a couple really important things I think that I have overlooked, and some of us have overlooked in terms of the risk associated with the convert. Well, one, the convertible note holders obviously are predatory towards the stock, considering that they're mostly delta hedgers, right? And I've overlooked that. I think a lot of us have overlooked that. Oh, it's okay. It's sell pressure, right? When these instruments come out, they're pretty much a 50 delta instrument, meaning if strategy moves 3% in a day, they'll move 1.5% that day. These convertible notes, essentially, they have 50% price exposure to the underlying MSTR, and that changes as the price of MSTR goes below and above the strike of those convertible notes. That's what delta is. It's sensitivity to the price of the underlying. But what they do, the convertible ARB, and we'll have a little section on this later, what they do is they short the equivalent exposure to MSTR. So they're net neutral. So when these converts come out, they go and they short the stock, and it's very predatory and provides sell pressure. Then as the price of MSTR fluctuates above and below the strike price of these convertible notes, they're both adding to their short as the price increases above the strike, and they're buying back their short for a profit as the price of MSTR goes below the strike of these convertible notes, and that dampens the volatility. And obviously, that's not great for shareholders who are looking for the volatility. Furthermore, with these converts, there's term risk, right? So the MSTR investor, or sorry, the M strategy itself, the corporation, they take on term debt risk with these notes. And we've always said, oh, they're spaced, they're laddered out 5 years and more into the future. And based on Bitcoin cycles, it's very unlikely the notes don't convert X, Y, and Z. But if you're going out and trying to rate strategies, preferred instruments, Strike, Strife, Stride, then having term debt sit senior to the preferreds in the capital stack is detrimental to the creditworthiness of those instruments. And for those reasons, I think Strategy is quite frustrated that they give convert bondholders all of this priority, these extremely good terms, very cheap call options essentially, and all they do is they smoke the pricing period by shorting the stock, short the equity, kill the vol, and they get the best terms in the entire capital stack. So I think Strategy is quite frankly trying to move away from these and give the best terms to the Strife holders and the Strike holders who are in line with the common equity holders who are long the stock, and they don't take on the term risk associated with the convertible notes. So I think that's kind of where they're headed.
Dan, hypothetically, if there was a market appetite big enough to consume, all of the demand for these that were long only, would they consider that? And is that even that would just have to be based off a relationship, basically a handshake, right?
I think that's a really good point. Is like, so you're saying, what if there was some sort of buyer who wanted to be a long only shop, and Strategy would then issue the preferreds to them, or sorry, issue the converts to them exclusively. I've talked to Josh about that a bit, and I think you have as well, Mason. And I mean, that's a super interesting prospect, but what sort of terms could you provide in the actual note? Like, I think if, right, wouldn't a convert arb, they're so good for convertible arbing, wouldn't the convertible arb shops just get in on that deal, and Strategy would have to throw their hands up and be like, well, I'm selling to these guys, and they said they wouldn't convert arb, and then they do convert arb. Like,
yeah.
I mean, I guess you're right. I don't know.
Yeah, that pinky promise isn't going to hold up.
Yeah.
No, they're incentivized to short the stock. So I don't see how a long only convertible note structure could be enforced long term without having to completely restructure the way these deals are done. Now, I'm not saying it's impossible, but what I'm saying is, if it is done, would the terms be as beneficial to Strategy in terms of the interest rate?
Yeah.
Great point.
Versus,
great point.
Versus would the potential note holder see it as potentially less attractive because they don't have that hedging opportunity? And this is kind of why when people have been kind of talking about the ATM, I've been like, it's not the ATM. There are too many other factors that go into what could be potentially suppressing volatility, what could be potentially affecting the equity price. And now that we've had time to reflect on it, we see the long-term net effect of the delta hedging that are going on with these convertible notes. And even though they are staggered out, I think the next one was 2028, 2029, one of those two. Even though they're staggered out, these holders are incentivized to short the stock in perpetuity. So the only thing that's going to break that is Bitcoin really breaking out and sentiment really shifting in our favor, broader market sentiment and equities and the sentiment around equity. Because right now, I think the sentiment around equity is relatively fine. I don't think it's low, but we're going to need to see some sort of pivot in the market to change the dynamics that are taking place right now with these converts. And we're going to need to see that more long term before they would even consider another one, I think.
Yeah, they can be super picky right now, I think, because they have the preferreds, so they can kind of just grind up the leverage ratio if they want to, and then if people are just banging on the doors like, please let us give you money, and they can just get really great terms, maybe that's when they finally just do it. Because at the beginning, I think they had really bad terms. I think some of their first deals, I think their Bitcoin is even encumbered, right? So they just keep getting better and better terms over time. So they're really not desperate for any of these deals.
So
no,
like,
they're not. Oh, go ahead.
No, go ahead, Adrian. Go ahead.
No, they're not desperate, but long term, I think they're going to have to consider some things that they're not wanting to consider. more active generation of yield on their Bitcoin holdings, perhaps some other kinds of structures with regards to what it is they're doing in terms of these preferred offerings. They're going to have to diversify because something is going to need to justify that additional multiple that we all know is coming. But if they go through this process and they just issue converts, even with more favorable terms, is the leverage that they add to the balance sheet going to be worth it in terms of the amount of Bitcoin they hold and the amount of suppression, the amount of Bitcoin they eventually hold, and the amount of suppression they're going to see in terms of volatility? It's going to have to be a balance. So I think that they're going to have to do something that signals to the market a higher multiple is justified, and also find a way to neutralize the effect of the neutralizing effect of the convertible bonds. So they're going to have to think outside of the box, and that's something that I think that they're probably working through now. I don't know if this is a problem they need to solve in the next 6 months, and I don't really even see it as a problem. I just see it as a natural progression of the market. If strategy is, as I've been saying, or as some of us have been saying, an economies of scale have different factors involved, and they both have adversarial actors and cooperative actors. Right now, what we're seeing is adversarial actors in one stance, but cooperative actors in another, and that kind of a seesaw effect is what's being equalized right now. So I do think this is going to shift, but it's just a matter of how they're going to do it.
Yeah, that's a really, really good point, Adrian. And I think Saylor's alluded multiple times to different products in different markets, and that could be really, really interesting. We've seen in like the UK market, for example, with the different LBEs popping up there and getting so much traction. All these markets are starved for yield. We've seen it in Japan and in South Korea. So I don't see why a product issued in another jurisdiction wouldn't really take off. A Japanese Stride. I think it really is a race between Metaplan and Strategy to issue those two products, and I think they can both win in that environment.
They can.
Yeah.
And the thing about it is, sorry, Mason, just one quick point. The thing about it is, right now, a lot of these other plays, they're not LBEs yet. They're just treasury companies. They haven't taken on leverage a lot.
Great point.
So I can see a future where instead of expanding into the market with additional offerings, what if Strategy expands these markets through acquisition? A lot of these companies are relatively small, and if they cannot like ramp up the leverage on their balance sheet and scale, they're going to be essentially flat. They're going to accumulate Bitcoin, yes, but what's going to justify the long-term multiple that we're seeing, that they want to see, that they have been seeing, right? So what if Strategy expands into the market in terms of acquisition and in terms of offerings into these other markets? I think that is something that not only broadens this economic model that we've been talking about, but also it can justify a multiple if Strategy is now scaling out into different jurisdictions with different offerings.
Yep.
Yeah,
So
that's a
go
super
ahead,
interesting
Mason.
idea, because it's like it's an injection of attention, right? Like if you're completely flat, your MNAV's flat. I mean, we're very much in an attention-based economy, right? And the companies that have the biggest followings, that have the most attention, that have the most narrative and momentum behind them are going to be able to do the strategy the best. And the ones that kind of fall flat on their face, yeah, it's a really interesting proposition that they could go in there and acquire them. Before that, Adrian, I was just going to say, I think Saylor said in Prague that I think he kind of admitted that going into other markets like Japan is going to be, very difficult. And I think he kind of hinted at that Metaplanet is going to have a potential lead there. So I thought that was a telling that, number one, he's looking into it, and number two, it seems very difficult.
It is, but Japan isn't the only market. So while Metaplanet, I do think, will eventually have a monopoly in Japan and perhaps even the broader Asian market as a result, he can find other ways to do things. It's just a matter of what they're willing to do and how they structure it. We didn't see the impetus for the preferred offerings until Strike came out, right? Then it was Strike, then it was Stride. And now we're thinking, okay, well, now he can do X, Y, and Z. It makes sense for him to do that. I think once they figure out a way to do this the first time, if it becomes something that they really want to consider, which I think, to your point, the fact that he even mentioned that meant that they were thinking about it.
Mhm.
So they're going to find a way to do it eventually. Which market that's done in, I can't say. But as you said, we are an attention economy, which I refer to as sentiment, right? This is all sentiment.
Yeah, yeah,
MNAV is all
sure.
about sentiment. MNAV is all about attention. So they're going to need to do something new outside of the box of what they've been doing in order to drive sentiment. And I want to be very, very specific here. They're not driving sentiment in terms of they're directly impacting sentiment. What they're doing is they're creating an environment where sentiment can run. If they scale this out into other markets and then the market starts to cooperate in terms of liquidity, in terms of sentiment, in terms of broader macroeconomic trends, then the thing can really run. I think people are putting cart before the horse in terms of their assessment of MNAV. MNAV is after the fact; it's not before the fact. So MNAV can only run if they create an environment for it to run, and for them to justify multiple longer term over the course of not just months and quarters, but years and decades. I think they're going to have to scale this thing out far larger than we're anticipating right now. And I do think that more preferreds, more offerings, expanding into other markets, acquisitions of some small company at some point that holds a Bitcoin on their balance sheet, maybe even pivoting back to the, like I've been saying, that they can do on the business intelligence side. If they find a way to scale that, that's another way to justify a multiple. They're really going to have to start thinking about this thing holistically, outside of just what Bitcoin derived moves can they make. They need to start thinking about what kind of a market move can they make, what kind of a broader move can they make outside of just Bitcoin, because all of it is synergy. And this is a synergistic opportunity that they have. So if they can do that, which I think they can, things are going to shift rather drastically. But as we've been saying to people for a year now, all of us individually, if not longer, this is a longer term hold. This is a longer term play. So where it is in 5 years versus where it was 5 years ago, I think it's going to be drastically different.
Yeah. So, you mind if we pop up this screen share here?
Absolutely, go for it.
It should be in the background. I requested to share.
Oh. So now I have to figure out how to allow you to share. That's super.
It should be somewhere where like the backstage is. But in the meantime, what do you guys think about?
Oh, there we go.
Very good. So I wanted to go through the three things just in summary. And I think this idea, Mason and I have been talking about it a bit too, and I think it's exactly what Adrian was saying, is this idea that ATM, like why is ATM, why is there a demand for equity, right? First and foremost. Well, we've seen in the UK markets and in the Japanese markets and in the US market prior to ETFs and then still during ETFs, there's been jurisdictional demand for exposure to Bitcoin. Plus there's kind of the sentiment demand for BTC yield and growth expectations on the equity. So that's kind of why ATM, like for ATM to continue working for any sort of LBE or Bitcoin treasury company, there has to be demand for that equity. And maybe that's also a couple of points I forgot to mention where the options markets, the liquidity, all of these things are inputs into demand for an equity. Then obviously you have the converts, which give holders, these large institutions, essentially a free call option on the common equity plus priority term claim over the Bitcoin, which introduces, as I said, exponentially more risk for strategy. And then the prefs, right? And the prefs, I think, are the real unlock. And I totally see what Adrian's saying about expanding into different markets and this, that, and the next thing. But then someone in the comments also said Saylor needs to drain the bond market. I really do believe the prefs are the pump between the bond market and the Bitcoin ecosystem. And I just really don't think people, obviously there's very little trading volume for Strife and Strike and Strata right now, but I think that will continue to increase. It really should, as long as like markets move slowly and people take a time to change their minds. But I think that will come. Do you guys want to hop in there? Say anything I missed?
No, it will, and I agree. The thing with it is that he can drain the bond market, and the share price will expand, and the overall value of the company will expand. But that doesn't necessarily mean that the multiple will expand. So,
well, wouldn't that be reflected in BTC yield? Like all pref issuance comes back down to the bottom line of BTC yield.
It can, and that does, yeah. No, that does make sense, but what kind of a multiple right now?
Yeah, fair.
If we're talking about 1.5 or 2, that's more akin to a bank, right? or something like that, or not perhaps more like a REIT, right? What we want is a multiple of 3, 4, 5 eventually at some point, right? So I think that the bond market, he can siphon away capital from the bond market, but there's two things with that. You're absolutely right, but there's two things with it. One, that will take a longer time. So we're going to see the multiple perhaps be, I don't want to say trapped, but stuck between 1.5 to 2 maybe as he does that process, because it's not as if he's going to get the bond market overnight, right? This is going to be something that's a very, very long process. And two, because of that longer term process over the course of the next 5, 10, 15 years or whatever, we're going to see a multiple increase, yes, but we're not going to see. But what I'm trying to get at is if he's targeting that 2x outperformance, I think that's perfect. If we want a larger multiple, I think they're going to have to diversify their approach.
Totally agree.
So I think we're both right, but sorry, go ahead.
No, I totally agree. I concur. I totally agree. And then
now 2x is fine. That's not a bad thing. 2x of Bitcoin for the next decades. I mean, that's a win. But you know what people are looking for, right? They want to see, well, can we get the 3, the 4, the 5?
I agree. Yeah.
Yeah. Is the leverage ratio affecting like the amplitude of the moves? Like, let's just say 3 MNAV is our baseline. And then at a low ratio, maybe we fluctuate between 2.5 and 3.5. But once we're levered up to like 20, 25%, does that kind of like increase the peaks and troughs to like 2 to 5 or something? Or is it maybe not connected in that way?
I think the swings have been more violent to the upside when they've had higher leverage ratios for whatever reason.
Mm-hmm.
So I think but that could also be because of a smaller market cap. So it's tough to do like a really, really kind of isolated experiment on historical data,
Yeah. And it seems like the run up to
thing with
November. Go ahead, Adrian.
Go ahead. I was going to say the other thing with that is that people are perhaps underestimating is exactly what Dan just mentioned. The market cap is going to take a lot more to move the price now that the market cap is over 100 billion. So we have a lot of factors right now a confluence of a lot of factors right now that are impacting price, which is why the moves that we've seen, we haven't seen a rip to $500 or $600 yet. It's because the market cap is much larger now, and there's far more players in the market because of the preferreds, in addition to what we just discussed with regards to the ARB trading. And then we have the options market, of course. We have all the leverage plays and whatnot, and then we have the underlying Bitcoin price action. There are a lot of factors going into play right now that are playing into where the stock price is. But we still should be cognizant of the fact that stock split adjusted before that, we are over $3,400 a share. When we're over $2,000 a share, people were losing their mind last year in the best way possible, right? So it's not as if this approach, this strategy isn't working. It is. It's just that it's going to need to ebb and flow and adjust to the market.
Definitely. I have this quick illustration of delta hedging because it does take it. It's easy to think you understand what it means and where the money's made, but it took me a really little bit to understand where the money's actually made. I just want to illustrate the point that the money's made on the way down. So this, you can see the MSTR price at 380. Let's say they issue a convert at a 50% premium or 30% premium. It's effectively a 50 delta instrument, meaning these convertible note hedgers, they borrow money, they buy the convertible note from Strategy. They short half the value of the convertible note in common equity. That's in blue. If the price of MSTR then goes down, right, down to 300, the delta or the sensitivity of the instrument to the price of MSTR goes down, right? That's kind of options theory. And what that means is now to be delta neutral or not exposed to the price, they buy back some of their shorts. And when they buy back these shorts are then bought at a profit because the price is now down. So they shorted up here, but they weren't exposed to the price. They bought back their short here, made a small profit, and they're still not exposed to the price of MSTR. But then as the price of MSTR runs back up past the all-time high or wherever, they then short the stock more to remain delta neutral and then run the playbook again, up and down, making money on the increments down. So that's just the way it works. It's kind of interesting the way they do that.
It's a seesaw effect is what they're playing right now.
Exactly. Exactly. So, right. As the price goes up, more shorting. As the price goes down, less shorting. What's that do? It dampens volatility.
Yep. And
And
they make
then
money both ways.
they make money, exactly. Then I think, to Adrian's point, to what we're all kind of talking about, I know Mason has something to say here, is the capital structure. So how much room is there really for strike and strife? And obviously these are pictures you've all seen before from the different offerings, but look how much room they really have. This is their current capital stack. Let me zoom in on that. This here is their current capital stack, and that's something to remember, how much runway there is for these converts if there is demand. Hop in, guys, if you have anything on that.
No, keep going.
Okay. And then I have this one we'll save for later. I know Mason likes that one. But what I wanted to really illustrate here is something that I think we touched on a bit, but it's the convertible securities, secured versus unsecured debt. And this is super key because we're trying to analyze all these Bitcoin treasury companies, whether it be new entrants to the market, strategy, Metaplanet, whatever it be. Almost all are secured or unsecured debt. So there's no specific pledge collateral for these convertible notes. What they take as collateral per se is the creditworthiness of the company. So in the case of Strategy, those convertible notes sit senior in the capital stack, and the collateral that has been pledged to them are upon the repayment date or the term date is that Strategy will continue to have assets and will be obliged to pay the principal back upon maturity of those bonds. Now, this is a little bit of just a historical fact, but secured debt, on the other hand, tends to have a higher recovery rate than unsecured debt in the case of default. But we don't think that's very likely with any of these companies. The point, though, the real key difference between a Bitcoin treasury company that has unsecured debt and one that has secured debt is the margin call and the liquidation risk. So you remember back in the bear market when everyone was saying Strategy is going to get liquidated, this, that, the next thing. They're going to get margin called. And we all knew, no, this is senior unsecured debt. So the company would have to be, upon maturity, Strategy will owe the debt if it doesn't convert the principal to the bondholders. With secured debt, there is collateral. And so the case of Naka, they have a 2x, and I don't know the exact provisions, but generally they have a 2x collateral requirement on the senior secured convertible notes. So if the collateral being the Bitcoin, let's say Bitcoin draws down 80% tomorrow, they would be margin called on that debt, and they would be either required to pledge more collateral to meet this 2x backing of the secured note, or they'd have to return principal to the actual bondholders, right? And so this means there is liquidation risk with secured debt, whereas with unsecured, there's not. So that's something that's going to be really, really, really important looking at these new companies, because secured debt will give the bondholders will give whatever company's offering secured debt better terms, whereas with the unsecured debt, the company will get less favorable terms, but again, they don't face this liquidation risk.
And that's why the ATM is so powerful. He's buying the Bitcoin outright.
Exactly.
So then again, I'm not trying to get people grumpy in the chat or that are watching this, but when people complain about the ATM and that it's suppressing the price, as we've just discussed, one, there are far more factors that are impacting price, right? And two, the ATM is the biggest weapon in their arsenal. Buying the Bitcoin outright and making sure that it's not at risk allows them to survive the bear market. So when we do see another drawdown, whether it's 20%, whether it's 80%, Strategy is far better positioned to survive it. Whether it's Naka, whether it's some of these other companies that have that collateral risk, a bear market gets a little bit more prickly for them, because if we do see a prolonged drawdown, they can have a variety of situations which can put that Bitcoin at risk. So these are all things that people, to your point, are going to have to work through and flesh out in terms of investment decisions that they make. And it's going to be a learning opportunity for us collectively, seeing how these different instruments last in a bear market. Because Strategy already survived one. I mean, 2022 was nuts. Everything blew up, right? It was the entire rehypothecation bubble. I don't think we're going to see that kind of a risk again, but if we do see a prolonged drawdown for any particular reason, this is why I mentioned the whole potential for Strategy acquiring companies or for them expanding into market in different means. I think there'll be opportunities there, and if they can take advantage of them, it may be, ironically enough, due to the weakness of other players in the market versus the weakness of their own strategy.
Yeah, I mean, depending on how bubbly this market gets in the next year or maybe two, there could be so many companies where we simply don't have the bandwidth to know to look at, all the capital
Correct.
structures, and it could really come out of nowhere. But I hear a lot of people kind of raising these concerns about this. I think it's top of mind amongst Bitcoiners, and I think I've been starting to think about, what can these new companies really get for size, and then how many companies can get really large positions. And if a company with 500 Bitcoin goes under, that's not really going to do much, right?
No.
Yeah, so it really has to be the first comers, and I think we're seeing this cohort here. I think Strategy, Semler, Metaplanet. We now have Anthony Popoliano, GameStop. Basically, companies with thousands of coins. Those are the ones that really matter. And so far, I think most of them, at least from the little research I have done, because there's just so many, they look okay. But then you hear stuff like Dan brought up the secured debt on Naka, and to me it's like, that's interesting. If I was an investor, I would want to look into that more.
So here's another thing that I've thought through. I've been trying to, assess what happens if we do see Armageddon, right? Or some kind of prolonged drawdown where Strategy is ideally positioned to survive while these other companies are not. And to Mason, to your point about the large players with regards to having thousands of Bitcoin, right now, every single one of these small Bitcoin treasury companies could go under, and it's not even going to be a blip in the market in terms of Bitcoin selling, right? It's just not going to matter. So what if Saylor is in a position in the future where he's playing Warren Buffett and he's bailing these companies out for the good of the ecosystem? So let's say that you have a company that's been a prolonged bear market. Strategy is relatively in a, I don't want to say safe position, but they are in a survivable position, even though they have a long drawdown. And you have a risk of a lot of companies starting to go under. Does Saylor start looking at taking positions in those companies? Does he start looking at to facilitate some kind of a, I don't know, injection of some kind? I can just see this going so many different ways because the Bitcoin trade is cooperative. It's not adversarial. It is in Strategy's benefit for these companies to succeed. Will if we do have a prolonged drawdown where companies start to fail, would Strategy somehow act as a buffer for that? Just because of the sheer scale of their operation. And I'm not saying that because I think it's feasible or true. I'm just saying, is it possible, and what does that even look like? Because everyone keeps talking about Armageddon, but with regards to all these companies are going to blow up, it's going to be the next bubble, so on and so forth. I just don't see that happening. There's too many cooperative reasons for these companies to see each other succeed versus a mass contagion risk of some kind spreading and them starting to drop like flies. So that's one of the other scenarios I've been kind of trying to game theory on my own mind and what that would even look like.
Yeah, I think it would have to be a pretty juicy deal for them to do that.
Mm-hmm.
I mean, if Bitcoin is imposing the free market on the world, I think that too big to fail kind of thing, or the I know it's cooperative, but by not allowing someone to fail when they deserve to fail, like if they over leverage, you're almost kind of like sending bad signals to the market that you can make mistakes and still survive. So I think we're gonna see a lot less of the too big to fail kind of things where people are making bad business decisions and then still able to like zombie their way through life.
Mm-hmm.
Perhaps it's not too big to fail. Perhaps it's more of a, if you letting them fail without risk to Bitcoin. So what I mean by that is, if they do fail, and if they are failing, what's failing in that kind of a scenario? It's not Bitcoin that's failing; it's the equity that's failing. There is a way that the equity can be allowed to fail while the Bitcoin can be acquired in some form of structured deal, isn't there? because I'm this is me asking, this isn't me telling. If if a treasury company is failing, the equity is failing itself. It's not the Bitcoin and the balance sheet that's failing. They're going to have a just very simple debt to income or debt to asset ratio. Is there a scenario where those Bitcoin could be acquired in a direct fashion that does not facilitate selling in the open market while the company is still allowed to fail?
Yeah, I mean it's like those hostile takeovers they're doing in the '80s, and there's probably people in the audience that know this better than myself. But they used to go up, buy a controlling stake in the company, and then sell off the assets for a profit. Right?
There you go.
It's essentially this. It's you'd buy the company at a discount. It'd have to be trading below probably zero 0.8 NAV. If it's trading below 0.8 NAV, you buy a controlling interest in the company, sell off the other assets, keep the Bitcoin. You got the Bitcoin for free. Transaction fees hopefully were less than 20% of the total cost, and you bought Bitcoin at a discount. It's like buying FTX claims in the bottom of the bear, right? You get Bitcoin for 10 cents on the dollar. Yeah.
And in this case, if you think of it, you know how there's a hostile takeover model, then there's an activist model, right? People take a large enough stake in a company to be able to facilitate change because they have that controlling interest, right, or a large enough interest. We can call this a Bitcoin activist model. Saylor's going in to make sure that he protects the overall price action of Bitcoin because it's in his advantage. It is in his interest to do so, but the equity is then allowed to fail. So you can think of it as a Bitcoin activist model or hostile takeover model, or however you want to phrase it. But I just think that because, to Nithu's point, it is cooperative. We do not want a too big to fail kind of a dynamic playing up, but we also don't want a situation where these companies are just dumping Bitcoin in the market and then the market overreacts because proportionally it's a small amount of Bitcoin, but you know what the market's going to do, right? Market makers are going to find a way to fund this and make it a larger issue than it is. So I think kind of in a way, strategy can act as somewhat of a circuit breaker for all of these things if that
Yeah,
happens.
I mean, it's in their best interest. Dan, remember when we were at Strategy World and I stopped in the hallway and I was like, Strategy is going to buy some of these companies. I was like, because I just felt this wave of momentum happening with these companies, and this was in May, and it's in their best interest. Like if the scenario arises and if it's feasible, if the Bitcoin's trading at a discount, or the company is trading at a discount to their Bitcoin, like Strategy was in 2022, 2023, it makes sense to do an acquisition and get the Bitcoin below market price. It's a no-brainer.
Yeah, and OBC Dave in the comments here is making a really good point too, though. It's making me rethink this whole conversation. But he's saying leverage buyouts tend to work better with illiquid assets like facilities, equipment, and such. Whereas, any sort of company that's in distress could, in theory, sell their Bitcoin on the open market and then wind up operations. And so that's a good point too. I guess we'll see. Maybe there's certain corporate structures that make it such that that's difficult, or the shareholders want to be bought out, and that'd be easier to liquidate on the Bitcoin. Maybe there's this a significant capital gain on the Bitcoin. They don't want to realize that gain by selling to the open market. So I'm not sure, but it's definitely one thing that could be done. So it's interesting.
Yeah, and so if it takes 10,000 hours to really grok Bitcoin, and then maybe it takes another. I mean, just our group alone probably has tens of thousands of hours of study on a strategy itself. So if there's going to be hundreds and hundreds of these Bitcoin companies, there's no way that our group or even the entire thousands of people watching this show can study and understand them all. So is there, I mean, I know you and Mason and Dan, you guys studied a framework for identifying Bitcoin treasury companies. Do we have some basic frameworks where we can just be like, hey, if they've got secured debt, we're staying away from those companies? Or what do you think the top red flags are, or how to, I guess, easily navigate this? Or do you just go with what you know?
I was talking to Dan today about a framework or an idea of, I was thinking about theta decay, but with Bitcoin treasury companies, it's almost like time and scale makes it safer. So, and as an investor, if you get early on in the Bitcoin treasury company, you're rewarded proportionately to the risk that you took, right? So if you were right in the beginning at strategy, you've been rewarded enormously. Same thing with Metaplanet. But as these companies get larger and as they have the flywheel in effect, and they have attention, and they have capital, and they can issue securities, and they have a capital structure, and they have trust, that, you know, all the things that are important, they become safer. And in my opinion, right now, there's only 2 or 3 companies in the entire market which show those signs
Characteristics.
of
Yeah.
characteristics of being investment grade.
Yeah, I think Metaplanet was like the most important event really to happen, because Saylor wrote the playbook, but then we don't really know if it's immaculate conception or not. Like Bitcoin can only happen once, you know, can strategy only happen once.
Mhm.
But now Metaplanet has proved you can run the playbook and it does work. So now we're going to see whether other companies are running that playbook correctly, or maybe trying to skip a step and you know, go straight for the home run.
The companies that try to skip steps are going to get blown up. I think that those are going to be the ones that are the first dominoes to fall. The ones that are just following the playbook and are trying to be somewhat prescriptive in their approach, they're, you know, issuing equity, buying Bitcoin, perhaps finding ways to issue debt, buying Bitcoin. I think they'll survive if they're able to maintain that model going. The one thing about it is that that also I think plays into a factor of how strategy was able to win. I think we forget that when they started this, interest rates were lower and there was quantitative easing, right, in the form of stimulus. So they had some advantageous market dynamics that were working in their effect just ever so slightly when they first started. Right now, we have a different interest rate environment. We have a different set of economic dynamics. We have, you know, I mean, the tariff situation is probably going to get rectified. We've got other scenarios in place right now that make this a little bit different for how these companies are going to have to assess it. Now, back to what Mason was saying, in terms of the flywheel, and this is something I'm trying to reconcile. Is it truly the flywheel if they can't use debt and equity? Is it a flywheel if they're only using equity? Like right now, Saylor can do the flywheel with only equity because he has multiple levers that he can pull for the ATM. Some of these other companies, and Metaplanet has some debt that they've used too, and similar. Some of these other companies, however, they're not using debt yet. So is that still a flywheel approach, or is that like a more of a dedicated, strictly Bitcoin treasury approach? And we're saying that Bitcoin is going to appreciate in value. We want it on the balance sheet. We're going to use that to strengthen our company and invest in the core business and so on and so forth. And it becomes like a different flywheel. Like what is the flywheel? Is the flywheel just accretive Bitcoin purchases going back and forth via different means, or is there also another flywheel that says we are acquiring Bitcoin, the Bitcoin is going to appreciate in value, that's going to swell our market cap, that's going to give us opportunities to invest back in our core business, which will then increase the sentiment around the stock, which will then increase our ability to buy more Bitcoin. Do you see what I'm saying? I think there's 2 different flywheel models that we can use.
I've been thinking about this, and I really think it's a race to get the preferreds, and specifically to get a preferred like Stride, which is that junk bond like preferred. And I think a few episodes ago, Dan and I shared our framework for, sorry, my dog's barking, for what makes a Bitcoin treasury investment grade. And one of those key metrics was to be able to defend the MNAV regardless of market condition, right? So if we get into a bear market and you're able to sell Stride, the junk bond preferred, and buy back stock, you're able to defend the 1 MNAV. And that to me is a real justification for having a higher multiple, and it takes some of the risk away. Dan, do you have any other thoughts?
I feel very strongly about that and agree. I also think the ball is shifting towards preferreds. Like ultimately, what is the unlock, the actual unlock here? It's the arbitrage between the Bitcoin CAGR and the fiat CAGR. That's essentially what Strategy's created. And so they've been able to do that in the equity markets by essentially selling fiat, or I don't know if you can call it fiat, but MSTR equity, and buying a higher CAGR asset. Now they're able to sell. It's very specific what they're able to sell. It's a 10 CAGR asset, Strife or Stride, for a 30 CAGR asset, and they can do it without any negative pressure on the equity. And that makes the equity that much more attractive, and it's essentially yield on their Bitcoin. And I know a lot of people are saying they're not getting yield on their Bitcoin isn't productive. I'd argue this is the craziest arbitrage of all time. And I think if you're a Bitcoin holder, this is something that really you can only do if you have a large stack of Bitcoin, and if you have the pieces in place to issue these preferreds. So I think I really do believe the preferreds are the banking strategy has shifted into sort of a financial product offering vehicle, or closer to that of a bank than its peers.
Yeah, I think I've been thinking about it a lot as well, and I've been trying to figure out if the Bitcoin treasury companies who just buy Bitcoin and maybe they offer products and services, and so they've got profits, if they're just in a completely separate bucket than the leveraged plays. And I think you're right, and I only just thought of it as soon as you said it. But yeah, if you're going to get into the leverage, you have to have a stride, because if you're going to lever up, you have to be able to defend your MNAV in a bear. But if you're just going to be like, I guess my favorite example is probably like a Tesla. Like if you're just going to try to dominate the world with your products, and you'll just stack some sats, that's kind of fine too, as long as you're, you have inflows and you can use that to make purchases. I think that's fine
a
too.
company. That's a company that holds Bitcoin in their treasury, right? That's not a Bitcoin treasury company, and that's the key distinction here.
Oh, what's the difference?
A company that holds Bitcoin in their treasury versus a Bitcoin treasury company.
Well, you're using Bitcoin treasury as like LBE, right?
Yeah, LBE is LBE just a treasury company. Yeah,
I think like the pure Bitcoin treasury company, that's what they do. Is they have a Bitcoin treasury, and hence they offer a suite of financial products based off of that. And I think that's the ultimate goal here for these micros, and we'll see which ones can do it.
And I think and really importantly, I think, and we've talked about this before, but I think we should say it again. There's two ways to defend that MNAV, and it's essentially Bitcoin yield in a depressed MNAV environment. And the only two ways to do that are either to offer a junk bond to defend that MNAV, create leverage, and hopefully the price of Bitcoin rises, and to defend a sub 1 MNAV, or to have an operating company. You can just have an operating business that spits off significant amount of cash flow, such that buying Bitcoin with that cash flow increases your Bitcoin yield. If you have a significant operating business relative to your Bitcoin stack, you don't need a Stride. You don't need any of that, because you have the ability to generate Bitcoin yield in a 1 MNAV environment.
So maybe I want to bring this up for consideration. Should we be careful about the notion of defending MNAV? Because you can't really defend sentiment. You can only create the opportunity for sentiment to increase, like kind of like what I've been thinking. So if we are in an environment where sentiment is suppressed for whatever reason, right? Whatever variety of reasons, is that still possible?
I mean, I think you're right in a sense, but it's almost kind of like the ability to defend MNAV is what creates the sentiment for the market to not push it.
I think that's an assumption, though.
Yeah, absolutely. Yeah, I'm not stating that as a fact. That's just my opinion.
Let's think about the mechanisms. Let's think through the mechanisms. How would they defend MNAV?
If the MNAV falls below 1, they issue Stride and buy back the stock. It goes to 1.
Right. So
that is the definition of defending MNAV. Yeah.
Right. That's essentially what the assumption is. So let's say that they buy back the stock, and they're doing that to quote unquote defend the MNAV. The theory is that you're buying back a stock buyback is saying, in theory, usually a stock buyback increases the equity price, because people are saying that's because you have strength, right? You believe in the company, you believe in the value of the company, so you're willing to buy back the stock. In this model, doesn't that signal to the market the company is weak, so therefore we need to buy back the stock? It's an entirely different thesis for the buyback of the stock. One
Well,
is
it-
implying
That gets pretty like existential. Like then you start getting into the territory of the fact that common equity has no claim over the assets of the corporation, and like you could say it's all fugazi, and like I don't know. I just think on a surface,
right,
It's-
right. Well,
Yeah.
because what I'm saying is that MNAV is sentiment, so that will play into it. Is what I'm trying to say.
that makes sense.
How the market perceives the action. I'm not saying that whether they can or can't do it. I'm talking about the market perception of the action can create an equal and opposite reaction.
Maybe,
Oh,
but it
I-
gives shorts less liquidity,
I,
which is a big.
I, I think MNAV is also a function of an expectation of yield, right? And when we're going into a bear market and maybe the expectation is there's going to be no yield because all of this is going to fall apart, the flywheel is going to stop, and then they buy back the stock and they create yield. That is kind of that, in my eyes, justifies an MNAV
Yeah.
increase, right? Because you are creating yield once again. So you are creating yield regardless of market conditions. And that's what's so key here.
Yeah.
Well, for me, I guess maybe it's because I think about it differently. I don't care about Bitcoin yield, so I that's why for me I perceive it differently. I care about outperformance.
That would be different then.
So,
If you don't
Wait,
care
you
about
care about
Bitcoin,
what?
speaking
You care
of
about what
for instance,
performance?
So I care about outperformance. So Bitcoin per share and
Outperformance.
Bitcoin yield, I don't care about them whatsoever. I just care about what is the proportional dollar value that I'm getting for every dollar I have in strategy versus every dollar I have in Bitcoin. As long as that outperforms, or that will outperform over time, that is my primary concern. And what I'm trying to say is that I don't think that the individuals that have the ability to impact this market care about Bitcoin yields or Bitcoin per share. They care about how they can impact the stock. So regardless of what action, I'm just trying to play devil's advocate here. Regardless of what actions strategy takes to defend MNAV, we need to be mindful of the opposite reaction that can occur.
I see what you're saying.
Because in my view, yes, they can use this to theoretically, quote unquote, defend MNAV. But the flip side of it, if I was a market player, I would see that as a moment of weakness and I would attack.
Well, so you're
For me,
saying
And then I would say,
They're weak already, right?
yeah,
but
but
I would
Yeah.
say
there's
to
a
Adrian's point,
difference
I would
between.
say
Go ahead, man.
that's a function of liquidity in the market. So you're essentially saying the shorts will pile on even if they're buying back. So you're saying MNAV's falling, sentiment's dropping. You don't care about Bitcoin yield. That's all fugazi. Shorts are piling on, and they can keep driving the stock down, keep driving the stock down. Liquidity's falling, X, Y, and Z. The only way to defend against that is to create less liquidity in the market for shorts. So
Correct,
buying
but
back the
would that be
stock, that's why I
large
think
enough?
buying back the stock is actually effective there, because you're
It is,
putting
but
upward
would it be
pressure
large
on.
enough though? That's
What?
all I'm saying. Will it be a large enough
Yeah,
volume? That's what I'm getting at, right? So, and again, guys, this is not me saying strategies for Fugazi. I'm just trying to play the devil's advocate here.
Sure.
What I'm saying is, if Stride, if the preferreds, if the market, especially Stride, are large enough to offset that balance, then it's golden.
Yeah.
However, if this were to occur before they have the volume in Stride to offset the potential shorting volume and to create enough of an imbalance in the liquidity to eventually drive the stock price up and changes and have the sentiment change and so on and so forth, it would need to be large enough to do that. So if
Mhm.
this were to occur before those preferreds and those markets grow large enough, that is a scenario where I can see if someone has my mindset of they're not necessarily worried about. I don't think market players are worried about yield per share or Bitcoin per share or Bitcoin yield. They're looking for opportunities to create money making ventures for themselves. If this can signal to the market that strategy has an effective way to buy back the stock, and they can defend the MNAV, that's one side of the equation. The other side of the equation is they are in a weakened position. Will that attract short interest? That's all I'm saying. So,
Yeah, so-
for me,
Go ahead and finish your thought. Sorry.
Yeah, so for me, as an investor that does not care about Bitcoin yield or Bitcoin per share, I can easily see a scenario where that happens.
So
And that's the
you
only
would
reason why I brought it up.
short. So you would feel comfortable shorting if MSTR was buying back
I
stock.
would. I wouldn't.
You
I'm
wouldn't, yeah.
I'm saying that there are market players that could and would.
Yeah, but like,
yeah,
where
I
would
think
you put your money? I'd fucking make a massive. If Strategy had a 30% debt ratio and they were buying back their stock sub 1 MNAV with Stride, like I've always decided decisions are made by where you put your money. I would not be short there.
yeah, I think a lot of the
But you're
short
saying
sellers
that as
right
you're
now,
saying that as an investor, not an opportunistic player.
Opportunistically, I wouldn't be fucking short there.
I think all the
Trading-
the opportunistic short sellers right now are trying to drive it to 1 and then they're out. I mean beyond the convertible bond guys.
I think
Right.
it's tough. Yeah, exactly. Like it's tough to make. your-
Chano said
I see
that
what you're saying,
he
Adrian, I
said
agree.
if it goes to 1, he's out. So, but yeah, I mean I think the important point here is that in a bear market there's always pain, right? And maybe this makes it slightly less painful, and maybe that's a middle ground that we can come to.
Yield changes
Maybe,
one hour price.
yeah.
Let me see if I understand it, Adrian. So
I
it's
was
almost
gonna,
kind of like,
I was gonna chime in. I'm
oh, yeah,
still
go ahead,
here.
Brian.
So look,
Please do. You've been silent this whole time. I'm just
I've been
throwing out ideas.
listening to what you guys have been talking about. It's
Taking
pretty
notes.
simple. Number needs to go up. That's it. I don't care the reason, what's happening. Number needs to go up for MSTR. Same thing for Strike and Strife and Stride. Whatever the reasons are for this, the number needs to go up. Whatever the mechanics of this need to happen, it's clearly obvious there's too many MSTR shares floating around right now, which is causing a depressed price. Whatever term you want to use, depressed or lower price. There's too many shares out there. If they have to buy back shares, it's the kiss of death. It just is. And the reason why, I got a real Coke. And the reason why it's a kiss of death is because what happens is the reason why a company buys back stocks is a very particular reason. Because if a company is sitting on a lot of cash and they buy back the stock, what happens is it reduces the float that's out there and therefore the stock price goes up. That's a non-taxable event. Because the worst is say, let's say you're Apple and you're sitting on whatever, 80 or $100 billion in cash. If you give that cash instead of as a stock buyback, is if you give that as a dividend, the investors in the ETFs or hedge funds hate that because you just triggered a taxable event for them. They don't want taxable events. And that's why they do these stock buybacks. And so what's happening here is that if they have to do a stock buyback, that's validation that they floated too many shares in the market. It doesn't matter how accretive it is. It signals the market there's too many shares that are out there. Now, whether you're going to short when it's down or you're going to short when it's up, doesn't matter to me. The number needs to go up. What I can tell you is that if Bitcoin hits an all-time high 2 weeks from now, pick a dollar amount, 112, 114,000, and Strategy is bouncing around at 425 a share, not good. And one of the reasons why is there's so many other choices to buy. Strike, Strife, Stride, whatever. You could buy all the other Bitcoin treasury companies, no matter how terrible you might think they are, how good you think they are. That has taken that buying pressure off. And the $4 billion in asset or whatever that's making up Misty is preventing it from going higher based upon the call options that are on it, the covered calls. And that is bled out, not from the MSTR shares. That used to be buying the shares and now bled out. So now given that, does everybody agree that the number needs to go up on MSTR shares and Strike and Strife and so forth?
Well, so I'm doing. Yes, and
Okay.
but I don't want to be that simple with it though. What I've been trying to think through myself is the preferred offerings are fantastic. I think that they are a way for Strategy to create new markets, have different levers they can pull. They can defend MNAV. I agree with all of that, but I have to take the opposite side to make sure that my thesis is strong. Now, the opposite side of that is Strike, Strife, and Stride. They essentially dilute the volatility profile of the stock because people that would have bought the common could now buy the preferreds. So you've created a larger market, but you've also indirectly pulled attention away from the common stock in a way.
Exactly.
Now,
No, I totally agree with you because now they have
in
other
that
alternatives
kind of
to buy.
right now in that scenario, what is good and what I think why strategy is going to win long term is because Saylor's creating an economy with all of that. With all these different offerings, he's attracting different players to the market for different reasons, and the market is strategy. So that's perfect. However, if we do have a scenario where they have to quote unquote defend MNAV by using Stride to buy the common stock, that needs one primary, I think, buffer. That Stride needs to have enough volume and enough size to absorb enough shares to offset that. So the only reason why I brought it up is because they can defend MNAV with that, but they need to be able to absorb enough of the shock and absorb enough of the shares, rather, to offset whatever low sentiment environment that they're facing. So this isn't me saying that strategy is going to fail. It's fugazi or anything like that. I'm just saying that people have to test their thesis, and this is just me testing my thesis in real time.
Yeah.
Green,
So let me address a couple points. Go ahead, Mason.
I just want to ask you a question. What do you mean by too many shares? Like relative to what?
Relative to what? So you have to think about it. They floated 20% more shares in the fourth quarter when they bought $15 billion worth of Bitcoin, which caused the price to collapse from 540 down. Okay. So they floated all those shares to buy $15 billion of Bitcoin. Was that a one-time scenario? Sure. But what they had committed to in the 42 plan that came out in third quarter, which was implemented in fourth quarter, was you have to realize. So when that happened, was they committed to that for that to take place in 3 years, but he did it in approximately 2-3 weeks. And so by flooding those shares, because the volatility was 220%, Saylor sold the volatility to buy the lower volatility item, the instrument. The lower volatility instrument was Bitcoin, because the MNAV means that this is more volatile than Bitcoin because it trades on a multiple to net asset value. We all get this. So what Saylor did is he sold that volatility and he bought the low volatility instrument to create a higher NAV. That's exactly what he did. Now, what he did was he sold more shares into the network. I don't own those new shares. Everybody on this call does not own those new shares unless they go out and buy them. So while it was still accretive per share, the number of shares increased that you did not own, which caused the price of the stock to collapse. Guys, this is simple.
I don't know if I agree with that
Grant,
point, but
Grant,
keep going.
Grant, explain to me this. So if you're sitting in November, would you have preferred strategy had bought no Bitcoin between now and November? And would we be trading at a 5 MNAV? I don't think well, you answer that for me.
And how do you justify a higher MNAV with no Bitcoin yield?
Okay, let me answer two questions. I believe the first question from you, Dan, was what would I have preferred? I would have preferred that he would have waited till January 17th to see what would have happened on that expiration date that we were all waiting for, given the amount that we were expecting, this open interest that was still in place. I would have thought that he would have waited through at least the last 6 weeks of the year to pump that up, to close out the year with a high Bitcoin price, and then to go and then realize those gains on February 1st, then that would have happened for the fourth quarter to realize that gain on the stock. We know that he didn't do that. And what happened in Q1, again, the price of Bitcoin was below their acquisition price. So then what happened is they reported a negative number. Those were not good. So those metrics that are now following it, now we're coming into Q2. So we need Bitcoin to stay above 96,000 and change. Let's just say it's 97,000. Hope that it stays at 107,000. And then we go back to the calculation that there'll be whatever the number is, a $14 billion gain on the books. But what we saw by the loss in Q1, which was announced, that took place in April, it had virtually no effect on the price, that there was an 82,000% loss. It had no effect on it. So the flip side is probably true, just thinking logically, that if they have a $14 billion gain, it won't make a difference. So
Yeah,
now,
agree.
so here's the good news. Here's the good news, what I'm going to tell you. The easiest way to sop up, and this message is to Saylor and to Fong if you're listening, okay? The best thing is, once you're eligible for S&P 500, is to get the S&P 500 inclusion. And the reason why is because of all the ETFs that will have to buy MSTR shares will suck up that $15 billion or $20 billion worth of shares, take that off of the market and reduce the shares that are actually being traded. If that happens, that's the easiest buyer that you will get to suck up the excess shares that are floating around. There's too many shares floating around. So Mason, does that answer your question why there's too many shares?
Yeah, I'm just having a hard time justifying a higher MNAV with no Bitcoin yield.
I don't really
Well,
care.
okay,
So the
so
Bitcoin
the-
yield. So okay, go ahead.
Okay. The only thing that justifies a higher MNAV is market sentiment, in my view. I don't think that the Bitcoin yield or Bitcoin per share is what justifies the market sentiment. I think that when we saw the run up to 543, we had a lot of things working our advantage. We had increasing liquidity at the time, and we had strong market sentiment because of what people are now calling a
Hey, let me jump into some of these comments. So the commenters here is that I have no MSTR options at all. None.
Hmm?
I closed out those positions 3 weeks ago. 4 weeks ago, they're all gone. I have no MSTR options at all. So anybody saying sorry about your leap calls, sorry about your losses, or whatever that is, guys, I don't have any. I sit in all spot shares. I've already announced what I've done. I've taken positions in other Bitcoin treasury companies, and I've done that weeks ago. So to everybody's saying there, now the person that talked about the Misty has a $4.5 billion sell wall, that guy's right. That's what's there. And we've seen this happen before years with Bitcoin. So any OG people know about this. That over there is putting pressure, not allowing the stock to run higher. And there's too many shares floating around. There's no, if anybody wants to argue this, the reason why there's too many shares floating around, because you guys are talking about stock buybacks. The only reason why you do stock buyback is because there's too many shares that are out there.
Well, I don't know about that because Misty and the
Yeah, I
covered
don't
call
know.
ETFs have to be net positive. They have to be net long. All covered call strategies are limited bullish strategies. So they have to have the shares equivalent in order to actually short it.
Hey,
So
I want to chime in. The guy MSTR, hi, you sold at the worst possible time ever. Don't worry about my positions. Okay. Just don't worry about them at all. Okay. I announced to them, do it. If you ever want to get on a space, I'm going to say this to all the trolls that are going through here in the chat. Anytime you want to do a space, I'm ready. Okay. Contact somebody else because I only take DMs from people I follow. But if you guys want to get in a space with me, let's get on a space and let's talk it through and we'll have people ask you questions. Until then, so be it.
Grain
Now, with
wants
that,
mutual combat over here.
yeah, I'm fine with
Well-
combat. We've been on a call for an hour here arguing about this. The number has to go up. It's that simple. And the way you get it to go up, as you guys just said, is either you buy the shares back or they get eligible for S&P 500 and those ETFs become the natural buyers to take those shares out of basically trading circulation, which can then cause it to go up. That's the only thing that'll be a big enough buyer to do this right now because there's too many other shiny objects in the little Bitcoin treasury companies.
Grain, I was trying to get on board with what you were saying about, hitting the ATM in November caused the drop. And the only way that I could kind of try to agree would be that selling ATM on the common lowers the leverage ratio. So maybe now the prices aren't as justified as they were. But why didn't the same thing happen? Or why did the same thing happen in March? Like we had a 4x move and then we had a 50% correction. And the same thing happened in November.
Oh yeah.
So,
And we never broke. I've already talked about this multiple times. We never broke the multiple over the 50-day moving average. It was a 2.47 in March, what we had there comparing against itself. And now it only hit 2.1 in November. So we're having diminishing returns on the multiple of the 50-day moving average comparing it against itself. And that takes into account all the net new shares that are out there and all known and unknown information. It's that simple. Now let's tell you the flip side here. When the shares become hypothecated, which means there's a short on those, not enough share. I want to use the word short. There's not enough shares available. These shares are not hypothecated. If anybody goes in my feed and types grain of salt, types in the word hypothecation, $ MSTR, you'll see at the bottom of the bear market, those shares were shorted and they were paying 30% APR to me as I loaned those shares out. I was the person that owned the shares in the bear market and loaned it out to the guys to freaking short it even more because I went, as Dan said, when the pain happened, and I went long and I made a big stack in there. And
So,
they were
Graham,
being, so now
what
we
is-
are here. Go ahead.
I
What
don't
is,
think
what
we
is a
raising this
company
as a
that you see?
consideration will open this can of worms.
What is a company you see in the Bitcoin space or the Bitcoin treasury space that is superior to Strategy right now because of the way they're acquiring Bitcoin and the way they're managing their outstanding flow?
If we look
What's
at
an
metric,
alternative? Because there are
no,
people in
no,
the comments who are like, "Yeah, I totally agree with Grain. You know,
okay,
this is bullshit. This price isn't going up." So, what would
yeah,
be your alternative for those
okay.
people?
And that's where I'm going to make a distinction between two things. If we look at it based, there's two types of typically investors. There's either technicals or fundamentals. The technical people look at the stock, look at the price momentum, look at RSI, MACD, 50-day moving average. The other people that typically invest are fundamental people. And what they do is they look at the income sheet and balance statement. You guys are talking fundamentals. You're talking the income sheet, balance statement, what they're holding in MNAV. That is completely so. So Strategy collectively, MSTR, Strike, and Stripe are the best fundamentals in the market, but the technicals on MSTR right now suck. Now, on the other Bitcoin treasury companies, their fundamentals are like, because they trade at a very high MNAV. So their fundamentals are very expensive. It's like a high PE ratio. It's an expensive stock. But from them, on a technical basis, they have lots of momentum and lots of volatility. So that's the difference that we're talking about here. You guys are talking fundamentals. I agree with you on that, that Strategy has the best fundamentals. But on a technical basis, looking at a price momentum, terrible. We all agree on that?
Yes,
Grant,
I do have a question
I
about.
think.
Go
Hold on,
ahead.
can I jump in here? I think this
Yeah,
is
go ahead.
just a fundamental philosophical difference between investor. I consider myself an investor and a trader, and I think it's just a difference of time preference. I just have a lower time preference, and I'm okay with Strategy converting, selling some shares and accreting Bitcoin. Because if you take Saylor's 20-year forecast where it's $21 million Bitcoin, it's a $12 trillion company, and that's at no premium. And I think I'm just okay with that in the long term, rather than going to some smaller, potentially riskier thing. And it sounds
Well,
like
I think that,
you're not okay with it.
yeah, I think that I'm not. What we were talking about had nothing to do with the other companies. We were just talking about how can Strategy maintain their position and continue to grow and buy Bitcoin and continue with the strategy, right? And the reason why I brought up these counterpoints and these devil advocate positions is because, as I said, I was testing my thesis in real time. So while it opened up a can of worms, perhaps it was a good thing to do because the conversation actually happened.
So
Now,
so let me
go
chime
ahead.
in, Mason, to answer this, why I'm out of patience. I'll tell you, there's a particular reason. If we were in a bear market and currently the S&P 500 was 20% below its high price, I'd be okay. But the S&P 500 is less than 1% away from its all-time high. It closed today at 6,092. So once the S&P 500 breaks 6,150 or whatever the all-time high was, 6,200, we're in a bull market. And if you're in a bull market and that asset and Bitcoin is very close to an all-time high and your stock price is not running, that is not good price action. The fundamentals may be great. I'll give you a good example. There are companies that if I had to make a choice between Amazon as a stock and Google, I pick Google every single time. Why? Because Amazon has 1.25 million employees. It's one of the largest employees in the world. So I don't like Amazon stock. Do I use their products every day and love the company? Sure. But I don't ever own Amazon stock. I prefer to have Google and have 1/10 the number of employees because humans are very expensive. So that's a difference between looking at two fundamentals of two good tech companies. We are in a bull market. We're very close. If anybody disagrees on the S&P 500, we have a V-shaped recovery. Hell, 7-8 weeks ago, people were talking about the demise of NVIDIA with OpenSeek. Adrian, what was the name of the company that came out? The Chinese company that made some free freaking software that crushed NVIDIA. Everybody's forgotten.
DeepSeek.
DeepSeek. It wasn't OpenSeek. DeepSeek. Oh my God. That was the biggest buying opportunity for NVIDIA going. who
But
bought the
Graham,
dip.
what's what's the message to investors? What's the
My message to investors is that you have to look at your allocation in your portfolio and trade the market you have and not the one that you want. And you have to be able to look and say, are we in a bear market or a bull market overall? Typically, with presidential elections that take place, the following year is the bull market for the last 3 cycles: 2017, 2021, and now 2025. They're all odd years. The following year after a presidential cycle is a complete coincidence of cosmic proportions. Coincidence. So what I'm saying right now is that if the stock is not going up and you can avoid triggering taxable events, I'm not giving anybody tax advice, but in an IRA account, you have no taxable events, whether it's a Roth or whether a regular IRA account. What I have done, I've already announced it previously weeks ago. I sold the MSTR in the IRA account and I bought other Bitcoin treasury companies. Do I have millions of dollars of MSTR stock that's at a cost basis of $22? Yes. And that's in a taxable account. So those I don't sell. I got to sell those very slowly to take care of the taxable events that will trigger by selling those. So for anybody thinks, and by the way, just see this, Nvidia's, all-time high. Well, I guess you should have bought it on the dip, whatever it was. To everybody that's on the call, did you buy the dip? You guys had this massive dip 7-8 weeks ago, right? And it
Great.
fully recovered.
So
Yeah.
if I agree that the number needs to go up, if we get a bear market or another bear cycle in Bitcoin, what does strategy do to make the
If
number
there's
go
a
up
bear,
or make it go down
I'm going to be
less?
real clear. If there's a bear cycle in 2025 and Bitcoin falls to
2026,
70,
2027, whatever. Yeah.
I don't care. 2026, 27, guys, I'm not
Yeah.
going to be on the call. I hope I hope we make enough money in
Oh my God.
2025. Guys, look, this is episode number 31. It's over a half a year and I've been in the trade. It'll be 3 years in January. It's not like I'm a new guy in this, right? I don't care about right now. I don't care about 2026. I care about July. I care about the price of Bitcoin at the end of June, so we can ascertain the gain that MSTR will have, right? We all care about that. I care about July 20th. That is the cutoff, right? That is the cutoff for the digital asset working group that's running for the president. Mason, do you agree on all these points? You care about June 30th, correct? The price of Bitcoin.
Oh, yeah.
Yeah. Okay. So we hope that the price is
I
over
care about the
100.
price of Bitcoin every day.
Right. But June 30th is
Mason
important.
owns a
because
lot
then
of
we-
Bitcoin, a lot of
Right.
fucking Bitcoin.
Right. Because then we know what the gain that strategy will then report, correct?
Yeah.
Okay. July 20th. That's when the working group has to come. They have their 6-month their 6-month timeline to reveal what they're going to do for the strategic Bitcoin fund and sovereign, whatever. The 2 things that they're going to do. We care about that also. The strategic Bitcoin reserve and the shares and the Bitcoin that they're going to keep. We also care about the Genius Act being finished and the stablecoin provision that's in it also. We need that to be signed off by the House of Reps and then signed into law by Trump. If that happens, those will be your catalysts. The Genius Act, stablecoins, June 30th and July 20th. Hopefully we all agree on those things, that those things happen and the number continues to go up. We also hope that all the net new companies that are coming in that are buying Bitcoin, but not buying it at big enough numbers. You got MetaPlanet that, I don't know, purchase whatever, 1,100 Bitcoins. That's great, but Strategy has almost 600,000 Bitcoins. So it's a very small number. It's not big enough to drive the price of Bitcoin up. But if all the other big companies start buying this and it catches on, I want to see the positive, price action. And it's all about eligibility for the S&P 500 to sop up those shares that are floating around. I think I've been a completely rational person talking about this. I like to talk about some other things, but I want the stock price to go up. And anybody
That might be a good segue.
Yeah.
Well, go ahead, Adrian. Were you going to respond to that?
Oh no, I think I opened up enough of a can of worms with my comments, so I'm just going to let it ride, and we can move on to a new topic now.
I have a good
I just want to
chart.
say that y'all wouldn't act like this if Dad was here. You know what I'm saying?
Oh, Jeff's not
I'm,
my dad.
I'm leading
Okay.
the chat, and you guys fucking acting a fool.
I have a great chart I want to show.
Oh yeah, do the chart, and then maybe we'll talk about Prague. Happy, fun stuff.
Cool. It's on the shared screen thing.
Oh shit, thanks.
This is strike percent of weekly volume back on some fundamental stuff here. I think it's pretty interesting when you look at it in terms of Strife volume, strike volume. So these are the weekly volumes in Strife and Strike. I use them liquidation preference times number of shares traded every week since Strife and Strike ATMs were turned online. And so it's not totally accurate, but it's accurate within a few percentage points. And then you can see the weekly ATM in both Strike and Strife. And the final columns are Strike percent of weekly volume and Strife percent of weekly volume. And this is a super key metric because obviously something we saw is that Strategy wasn't really able to ever sell more than 7% of weekly volume in ATM without comfortably. And what they're able to do with these self-healing products that Ben talks about a lot is that they're able to ATM a huge percentage of the weekly traded volume in these two preferreds. So I think if we just get a small increase in ATM or of trading volume in Strife and Strike, those ATMs will continue to tick up in a really significant fashion. So I don't know. I just think it's a really cool. If you look at these weekly volumes, you can see how well they're able to push these products into the open market without having an adverse effect on the price. Like look at Strife, look at Strike. They've traded flat for like 3 weeks, and you can see their percentage of weekly volume, 30%, 31%, 18%. Like these are massive numbers, and they're really going to be able to push these products out once there becomes any substantial demand for them. And I've been, doing my best to increase that demand. So I think that's exciting looking out on the horizon.
Yeah, just ballparking it. Do you have a projection for how many Bitcoin they might accumulate just from preferreds?
I have a sheet. Or let's not get into it now. But
Yeah.
We'll save that for another time.
Yeah, sure.
But it's massive, right? They have 8 to 20 billion worth of room on their balance sheet for preferreds, depending upon whether or not the converts convert. I assume the converts will convert during the next run up in stock price. They won't issue more. Maybe Ben thinks they'll issue more. I'm not sure, but it all comes down to demand for the preferreds. And I'm just going to reiterate. I'm going to say it again. Like, what is Strike? I mean, you're getting the ability to buy one MNAV MSTR with an 8% fixed coupon and perpetual upside on the equity. If you have cash, if you're diversified between MSTR and cash or a bond or something, this is the product you want. So it's just really, really attractive. And the fact, the way it's priced now, and I did a little post on it earlier, but it could perform on par with MSTR up to $650, $700 MSTR. So that's really attractive with very little downside risk. So that's really something to look out for. And then obviously there's ATM risk. Like if ATM suppresses the price, then maybe the yield stays high, but there's just a lot of upside with that product.
Yeah, I mean,
so the thing with all of this, and to everyone in the chat, to everyone on the call, let me be more specific here. Most of us do believe in the long-term viability of Strategy, right? But if we are the investment grade podcast, I do believe we have to test our thesis. So there's nothing wrong with that. So Grain providing that perspective and me providing my perspective and Dan and Mason providing their perspective is exactly why we're here. With that said, I think Strategy is at 391 right now. So it's not as if as if the investment thesis has fallen apart. It is just good to test your investment thesis, right? So that all this conversation is great. And I think Dan's point about all the preferreds is very well taken. They are very powerful tools that I think the market is grossly underestimating. What we just need to make sure that we are aware of is that we fully understand how those tools can be levered and all of the counterbalances that exist with those tools. So this is all a fantastic conversation in my view, though.
Yeah, and my thesis has always been basically what Saylor said about, I think it was from the mobile wave. He said you invest in something when it's disrupting and it's the clear winner. So when Netflix put Blockbuster out of business, when Apple came out with the iPhone and put BlackBerry and all of those companies out of business. And so with the preferreds replacing the convertible bonds and with Stride giving that extra lever for the bear market, I've never been more bullish. So that's my thesis really hasn't changed, and it's really only gotten better.
Right. So I'll chime in here with something. We can move on to the next topic. So a year ago it was back then, it was MicroStrategy World in Las Vegas. I went over to talk to Saylor the first time I met him, and I said, I have a question about Andrew Ross Sorkin and various other people that interview you on TV. And I said to him, I said, do these people get it or don't get it? He goes, yeah, they get it. They actually do get it. But they can't have me on TV saying Andrew Ross Sorkin can't be on TV. Hey, I think Bitcoin is great. Michael, tell us about your Bitcoin position. Yeah, we think it's all great. They have to play the devil's advocate. Michael, tell us why you bought Bitcoin. Tell us why this is good. Tell us why it's going up. Oh, really? It works like this. You're using converts. Why does converts work? And so what happens is that gives some form of controversy, whatever you want to call it, contrived, or that comes out. It comes across that he has to defend his position and makes for good television. Okay. So on this call, what we're talking about over here is I let you guys talk for an hour. And then I chimed in and I said, look, the numbers got to go up. It's that simple. And my belief is this. And I think we all agree the numbers got to go up. And Mason, like I said back to you, if we were in a bear market, if it was 2023, right? We don't know who the president's going to be, or 2022 after you got through the crap that happened with FTX and all the other crap with SBF and Terra Luna and all that blow up and crap that happened, right? So 2022 was miserable. 2023, nobody really wanted to buy it when I did, right? And then it goes up. And then 2024, we have an awesome year, right? We get a go thinking about the president doing the spot Bitcoin ETFs. Everybody knows the history. On January 11th, we get all these tailwinds. We get a double top in 2024, which is all great, right? And now we're in 2025, which tends to be, like I said, 2017, 2021, and 2025, the year after the halving. Now we want the price to continue to go up because it should be a bull market, and we're very close on the S&P 500. So from that perspective, you're right. I am not patient in this particular year. In 2026, 2027, I'll be patient, but I'm not going to be arguing about whether or not MSTR is great. I'm just not going to be here. I'll be chilling somewhere else, and then I'll come back in during the next cycle, whenever that might be. And if the price continues to go up, then so be it. Then that will be great. But as of right now, I want to make enough money in 2025 that I don't have to worry about 2020. Well, I don't really need to worry about any of the years going forward. But from that perspective, I want to make enough in 2025 to make 2026 and later more comfortable.
Well, I think, yeah, everyone is excited to do that with you, Gran.
With that said, can we talk about Prague? Can we talk about Prague? Prague
Yes,
was so much fun.
that was our next that's our next topic. So we're finally getting to the second topic, I think, on the agenda.
Second topic, and I'll just
tell us about Prague.
Neither. You're not keeping us on track. What are you doing?
Yeah. So Prague, Prague. I got there a day earlier than Dan. The city is gorgeous. They vacuum the streets at nighttime. They pressure wash it. The streets are beautiful. The city is gorgeous. The food was great, relatively inexpensive because they're on Czech krona. They're not even on the euro. Okay, so from there, the prices were reasonable, and the shops were great. Everything was awesome. I posted pictures. It was awesome. So what about Bitcoin? Went to the conference there. They're hardcore Bitcoin people that are there in Europe, and especially the ones that went to this conference. The leadoff presenter said, hey, everybody's here for number go up, and we all know this. Great. Now let's talk about Bitcoin core code. That was the leadoff presentation on Thursday morning. And for the whole morning, they went through, they talked about the Lightning Network and wallets and how do you build applications on top of it, almost whatever. I'm making up the percentage. 50% of the presenters, the exhibitors in the exhibit hall were made up of Bitcoin mining companies, Bitcoin ASICs, rigs, cooling systems, equipment, anything around that. I would say 50% of the exhibitors were based upon that. There was a t-shirt. You could buy a Bitcoin t-shirt, but you can only buy it with a Bitcoin Lightning wallet, which I do not have set up. To be honest with you, that was pretty clunky to get that set up. So I did not get a t-shirt paid with Bitcoin. I could have paid in Bitcoin, but I couldn't do it because I didn't have a Lightning wallet set up. So they were really hardcore. You could pay for all the food in Bitcoin, and it was announced. I did a review last night. You can see my space. 500,000 euros were transacted through Bitcoin to buy various things at the show, whether to buy the tickets, to buy the food, to buy tchotchkes or t-shirts, all that stuff. Approximately 500,000 euros worth of Bitcoin were used. So they believe in Bitcoin as a currency over there, and they believe on using it. Okay. And the Bitcoin treasury companies, I don't have a Bitcoin Lightning wallet. Yes, that's true. Then the next day, people talked about it. Saylor talked. There was a Bitcoin for Corporation event, invite only. So even though I had an enterprise ticket, which was the middle ticket, not the whale ticket, we had to get in to go to that event, which was invite only, but no cost to go in. And Dan was there with us. We met with various other investment bankers, and I will not reveal the names, but we were offered different positions in pre-IPO, different Bitcoin treasury companies, let's just say it. And those are quite interesting. I have done private placements. I'm an accredited investor. Um, PE, private equity, is really not my thing. I prefer to get in and get out. I don't like some of the lockup periods. There's you have to read a lot of these different prospectuses to do that. So we were offered that. It's not particularly something that I do. Dan was there. What else could I say? The Bitcoin treasury, there was no room there when Saylor was talking. The room was completely full. We talked to a lot of the CEOs of the current Bitcoin treasury companies multiple times. Major crypto Twitter or Bitcoin influencers, 100,000, 400,000, 500, that million followers. We talked to a whole bunch of those people. We talked to OGs, and that's where we were. So Dan, you chime in. What was the Bitcoin Investor Day like?
It was good. It was really good. Definitely lots of insights. We heard about what's kind of going on in the Bitcoin space. I think, but I do have to give Adrian credit, and he's been doing a lot with these different Bitcoin treasury plays. So I think we spent a lot of time with the Alt BG guy. I don't know if you talked to him at all, Adrian, and we also
for a little bit, yeah.
Yeah. So it seems interesting. I mean, I think the most interesting product, obviously, they're the only crew doing the Bitcoin denominated converts. What's your take on that, Adrian?
So I have to be fully transparent. I haven't even looked into it greatly. So I don't have a fully fleshed out view on it. Do I think it's a novel approach? Because I believe that they are attempting to do the converse in the Eurozone, and there's some different dynamics that I'm still trying to wrap my head around in how they're going to execute it. But if it works, this comes back to what we were discussing before with adding leverage and what is a true LBE versus what is just like a Bitcoin treasury company. If they can execute it, I think it makes sense. But I need to wrap my head around it because it's not as straightforward as the converse that strategy is doing.
Yeah, it's pretty interesting. They're injecting, so the company gets Bitcoin in. They don't have to convert into Bitcoin with the fiat convert capital. They take on no term risk, essentially, right? With strategy, they're pledging a principal coupon payment on a specific date in the future to their equity holders, whereas the Alt BG is pledging essentially Bitcoin back to their shareholders. So what do not shareholders, they're convertible note holders. So what's the bond profile for the convertible holder, right? They have Bitcoin downside with equity like upside. And what is the risk for those holders? Well, in the case of strategy, right, you have that bond floor, the principal return to you at a certain point in time. So that's your floor. And your upside's the equity. Here, your downside's Bitcoin, your upside's the equity. The risk you're taking on is that Bitcoin outperforms the equity. So there's a real scenario in which Bitcoin outperforms Alt BG spot shares via maybe too much common stock dilution, and what you get is you'd underperform the Bitcoin you initially were holding. So that's the risk you take on. However, for Alt BG, it's a fantastic deal because again, they don't have any sort of liquidation risk when it comes to their Bitcoin. So it's another way of doing it, and clearly it's been working for them.
All right, cool.
I think
Anything?
I was
just pass this one over to you, Grain. I mean, we heard a lot about the equity market dynamics in England, in the UK, and that was an interesting conversation we had with James Van Straten regarding kind of how people are thinking about leveraged Bitcoin equities, why people are buying companies like Coincilium with so much fervor, and what sort of the exposure people have to Bitcoin related products is in the UK.
Yeah, and so let me say why I made the face. So look, you get your news from wherever. And I thought in Europe, there's a lot of rich people. And I thought that I thought Germany was a powerhouse worldwide. And this is where I'm going to get very quickly to what Dan just said about with the UK market. It was brought to my attention. We were there and Tad was there. And Tad just said to me, I said, well, there's a lot of rich people here. And he's like, no, you're not getting it. I'm like, what don't I get? If Germany in per capita GDP was compared against US states, where do you think it would rank? And I'm like, I don't know, probably top 25%. And the math is Germany's per capita GDP is $55,400. It would be the 46th state in America, which means it would be below Kentucky, but above Alabama. And then you get the UK would be ranked the 49th state in America in per capita GDP. So when I went to Prague, what I realized was there's a lot of beautiful people there that worked there. There was a lot of tourists that were there. The city was gorgeous. The people were dressed phenomenally well. And there's a lot of beautiful cars that were there. But then when you look at the GDP per countries, they're in terrible shape. I mean, if you're down by Alabama and Arkansas, and I'm sorry for the people that live in those states, but it's just a ranking that if you're below Mississippi, not good, right? And so when I'm talking about this, then we talked to James, what he basically said is that a lot of people in the UK don't even have brokerage accounts. They have pension accounts and they don't have broker, even though these are available for them, tax advantage accounts, that they don't even have them at all. They're basically real estate people. And so what happened is that when in the UK, you have a SIP and ISA accounts. And I'm not an expert in this, but what I can tell you is that the people there, they are at least 5 to 7 years behind the US. So everybody that's in the US, you've already won. The fact that you're on this call listening for an hour and 39 minutes means you've already won. If you've been in MSTR for more than a year, you've already won. Take your victory lap, right? You're so far ahead of the rest of the world, specifically Europe. There's no comparison. And the reason why Metaplanet shot up is because of the NISA account that's in Japan allowed them to easily buy the stock in their retirement account, and then it basically trades tax deferred till you take it out. That any country that has that and their people that live there that do this have this massive advantage, but they have to do an educational background to explain to people that you can actually make money in stocks. But the only stock that people are getting excited about, and maybe that's hyperbole, are the Bitcoin treasury companies because the returns are so great. So if I put in 5,000 euros into it or pounds or whatever's available in that local currency, you do that and it does a 5x or a 10x, it changes your life. Totally does. Just like what happened to me in 2017. So that's the difference. And so when we had these conversations of what's going on in Europe, I was wrong. I did not understand where Europe was in relationship. I think Germany is great. They make awesome cars. But then when I found out about their GDP, shocker to me. I did not know this. And when I heard that, I was like blown away. And that altered my perception of where we are in America. So everybody that's listening on this call, you've already won. Whether you agree with me, don't agree with me, hate me, like me, whatever it is, the fact that you're on this call and you know this information that we're talking about compared to Europe, you're 5 years ahead of them. And in Bitcoin terms, comparing that to the real people, you're 20 years ahead of everybody else. And if you have more, I'm just making a number up, if more than 25% of your net worth is in Bitcoin, Bitcoin treasury companies and so forth, and derivatives, IBIT, Misty, whatever, you already won. Compared to the rest of the world, you've already won. You're that far ahead. So I think that's where we are. And when I heard this information, and it's very different when you go talk to people in person. You're listening on a call, and that's why I like Spaces, because I could take questions verbally, hear that other person talk. But when you go, I recommend that everybody goes to a Bitcoin event, talk in person. And if you can present your case in less than 60 seconds to meet somebody and say something really smart and intelligent, you'll probably learn a lot more than you will on any space. And with that, I mean, I thought Prague was awesome. I would love to go back again.
Yeah, I had tons of FOMO as soon as I saw everybody saying they were headed to Prague. I was like, I need to be there, but there's always next year. Right?
Hundreds of people watch. Dan shows up, I'm like, you have to see the clock, the astrological clock that's 600 years old, right? And the thing runs and it's exactly right on time and has this cute little thing that it does on the top of the hour. The important part is there's 400 people standing there watching this for 30 seconds and then it's done. And it's just awesome. And so anyway, with that said, Prague was great. We went to a bunch of parties. People saw we were out to 4 o'clock in the morning. I mean, and I felt safe. I walked home. I did not take an Uber. I walked home at 4 o'clock in the morning and they're vacuuming. I swear to God, they're vacuuming and pressure washing the sidewalk. It couldn't get any cleaner. Oh, and homeless people. No homeless people. I saw 3 beggars or 4 beggars in all of where I walked around Prague, and I was walking 20,000 steps a day. I saw 4 people begging for money. That was it, and not a single homeless person. Now, there's got to be homeless people in Europe. They just put them someplace. I don't. Hopefully, that doesn't sound bad, but it
You
felt
get a one-way
great
ticket out of Prague.
yeah, it just felt great to walk around the city. And then we went to this great event. The events were great. There was lots of Americans there. The Bitcoin treasury companies and that conversation was a separate group that was 250 people, maybe. It was viewed as a curiosity. It was not viewed as mainstream. Don't want anybody to think that this is main. Saylor's got 4 million followers. We go to Europe. I would bet his followers are 0.1% European. I'd love to see the geographical makeup on it. So
Was it more Bitcoin only than Vegas? I was kind of guessing it would be.
Bitcoin only.
Yeah.
Very much
Yeah.
so.
Yeah, and they
Yeah, I
talked
need
a
to
lot
go.
of right. So that was a great event. I believe there'll be one in the fall. I mean, flying there's a bunch of money and doing that, but the takeaway is it was a great experience. Dan was a great traveling partner. I was there with my buddy Plank, and so we talked. The people that we were surrounded by. Dan, how many investment bank? How many people that 2 people post talking to us about particular deals, and then we went to a bunch of places with 2 ex investment bankers with us. So it was the best of both worlds. They'd explain, we'd hear something, and then we'd ask them, "Great, can you tell us how this actually works?" And it was literally like Latin. I'm like, "That's how it works." I have to go think about this because I'm more of a stock investor. I'm not a private equity guy. Is that fair, Dan?
That's fair. And I think one thing I heard to reinforce a lot of people's bullish sentiment was there are a lot of people that are excited about a lot of different companies. But one thing I did hear a lot about was I have an MSTR core position and I'm not selling it to buy these other LBEs. I'm adding to my stack with the different LBEs. So a lot of people are excited about all of the Bitcoin equities. And that's something a lot of people aren't thinking. You can be excited about all of them. So that was really cool.
You can. And I want to go back and say something that's really important here. Because of my age, I have a large IRA account, whether it's a Roth IRA or a regular IRA. I have both. And there's a weird way I was able to do the Roth IRA. I did not do it as a backdoor Roth contribution. But the important thing to understand there is that even though I own MSTR in both, and my MSTR position was way bigger in my IRA account, I could sell that without triggering any taxable events. In effect, it's like living in Dubai, right? Or Puerto Rico, even though I don't live there, to sell that and go chase other higher volatility things. But in the straight brokerage account where that would trigger taxable events, I have a large core position at MSTR, which I'm going to keep, and I'm going to sell that as time goes by. So again, I'm the same person, but on the same equity, I have 2 different views of how I invest in it or trade in it based upon the type of account that it's in. And so any country that gives that choice to people, those countries win. Any country that does not do this loses. And you can't buy. Oh, the other crazy part was it's incredibly difficult to buy Bitcoin in UK. Right? When we heard that, Dan, I was like, "What do you mean it's difficult to buy Bitcoin?" They're like, "What don't you understand about what we just said?" I'm like, "I don't get it. You would ACH the money or wire the money to a Bitcoin exchange, buy the Bitcoin and put it into a hardware wallet." They're like, "No, that's really hard to do." You could do that in America for the past, 13 years. So that's just straight Bitcoin. So I did not realize it was like that in Europe. And I don't know about all of Europe, but when I was there. So anyway, I hope that's a good feedback for the people that are going on what we saw. So it was a great trip. Mason, you doing all right, buddy?
Yeah. Do we have any more analysis?
No more analysis.
I mean-
you guys are great. I'm dropping off. You guys are great. Take care. We're at almost at the 2 hour and 50-minute mark. You guys are great. I like being, if I have to be the devil's advocate, that's fine. Make this a little bit exciting, a little bit of turmoil. Nobody wants a show where everybody's like, oh, that's all great. Let's go home, drink a bunch of beers. That'd be pretty boring. So we have to make it a little bit lively every once in a while.
Oh yeah.
The beers are going to get drank.
The beers are gonna drink. Take care, guys. Have a good night. Bye.
Thanks, Crane.
Later.
Thanks. Bye.
Yeah, it's it's 11:48, so we can probably just take a look at the S&P 500 spreadsheet real quick, and then we can do final
Some
thoughts
numbers,
and
let's do
whatnot.
some numbers.
Exactly. So let me.
And we can look at the MSTR IBIT chart, the all important chart to close out the night. And Mason can do some
have that
technical
one?
That's my
analysis.
favorite
for us.
chart.
Have it up.
Okay, cool.
Yeah.
So, Bitcoin price today when I looked was 107. That leaves us with this hurdle to get through, which is to erase the last 4 quarters of negative EPS. We got to come up with 5 billion, and at the current price, we double that. So we would have to drop to like below 96 to not, trigger those qualifications for the S&P 500. And of course, there is still the committee hurdle to get through. But I think most of us think that that's just an eventuality. They probably wouldn't be able to delay it by more than 1 quarter. And the longer that they kick the can down the road, it just means that strategy gets in at a higher rank. So that's going to be another benefit to the higher market cap and all the ATM selling. That's probably an unintended consequence that maybe some people didn't think about, is that giant market cap is just going to put them so close to the top that the passive inflows are going to be pretty nice.
Yeah, you got to see this. Yeah, you got to see this one out. Like this is it.
So
We've been waiting for this part.
you should mute.
Okay.
Yeah, this is it. This is part of the trade we've been waiting for, and I mean it's going to be really, really exciting. There's still a little bit of echo. Guys.
All right, so we'll do moon math real quick, and then we'll just do final thoughts. And I was going to try to pull an all-nighter, but you guys are lightweights. It's fine. So the moon math with 592,000 Bitcoin, 107 price. We've seen this chart before, and it just gets nuts based on different MNAVs. But the one thing that I really think people should do, and I think this kind of solves the debate or any of the FUD that anybody wants to talk about, and it could be proof of reserves, it could be whatever the hell is trending on Bitcoin Twitter. And if your model is 150K Bitcoin with a 4x MNAV, and you think, okay, this other company has proof of reserves, so I think we should ding strategy, then put into your valuation model what % chance you think proof of reserves puts them at risk. 1%. So now you're gonna change your valuation from 1109 to like 1098, right? So that's really all you have to do is plug in your assumptions, and if you want to take the valuation model and ding it by a few % based on what you think that level of risk is, that's really all it is to it. I don't think it's a binary thing where it's like, oh, if strategy doesn't do proof of reserves, I have to just exit the entire trade. Just build your price targets and keep it moving.
Yeah.
Let's talk about
Yeah,
proof of reserve
and,
nothing burger.
Do you guys mind if I pull up the MSTR IBIT here?
Yeah, go for it.
Yeah.
We're done with my
Cool.
charts.
Okay. Love your charts, Soleil, as always.
Actually, while you're doing that, this is actually Jeff's spreadsheet, and when he sent it to me, it was like a 6-year-old walking into frickin' Disney for the first time. I was like, there's 75 tabs on this thing, and I'm just like trying to reverse engineer all the calculations. Like, when a sucky car company orders a Tesla just so that they can rip open the hood and like see how it works and figure out how some real engineering is. That's what I've been doing. So yeah,
You're gonna sell it online for a profit.
yeah, exactly. I
Spread,
thought about it.
Jeff Walton's
Yeah, I
spreadsheet.
thought about it. I could just auction this spreadsheet off in the comments and fucking just like never
Make
work
it
again. Yeah,
retire
exactly.
again.
Retire again for real.
So like sell subscriptions and then buy Bitcoin with it, and then you'll have like a 5 MNAV pretty soon if you sell.
You'll have a 5
if you sell
MNAV.
common equity.
And if you buy MSTR 1080s, you could have a treasury company that competes with ours.
Yeah,
For real. What's the MNAV on this
Yeah, but
spreadsheet? It's got to be pretty big.
It's pretty high. It's pretty high, but don't dilute it. So yeah. And, but okay, this is MSTR IBIT. That for anyone who isn't familiar with this chart, it is MSTR price in IBIT, and this is a weak attempt at the 200-day moving average in the teal line. It doesn't go all the way back, so you can see we had nice movement upwards. We had that blow off top. I think people have to stop thinking about when we opened on that one day at 530 as an actual price. That was a 5-second price, and then it proceeded to fall 20% that day. So the way I think about it is the real all-time high is around $420 a share. And we touched that, and then we collapsed with the Chanos coming out and short reporting. We fell down to the 200-day moving average, which we've been bouncing off in a very weird, eerily fashion. And Saylor essentially shut off the ATM right at that bottom along the 200-day moving average. Will we continue to trend up and towards the right? I mean, so long as they continue yielding Bitcoin per share, so long as the equity likes a 1.8, 1.7, 1.9 MNAV, I think this will continue up and to the right. Are we in a horizontal channel above which we'll break out? Josh has said that as the sell pressure in the common stock equity diminishes, we could see higher IBIT ratios exceeding 7, which is obviously something we're all looking for. I think if we do hit an 8, a 7, 8, 9 MSTR IBIT ratio, that's synonymous to 3, potentially that's 3 plus MNAV. If we're at 150 Bitcoin and 3 MNAV, you people will all be very wealthy. So I think for all those reasons, things are looking really good moving forward. And I'm long calls, and setup's not bad, especially with the no ATM. It's clearly had an impact on the stock. And I was one. Can we stop sharing this? Here you go. I was one to say that the common stock equity doesn't matter for the price. The ATM issuance doesn't matter for the price. What I didn't understand, this is something Ben helped clarify for me, is like, while the common stock ATM is only less than 1% of the total daily traded volume, it's a narrative thing that drives the price down. But not only does the narrative drive the price down, but then people will come into the market, big players, and what they do is they put pressure on the equity by shorting it with lots of money. And it seems like it's a simulated sell pressure on the equity, and everyone says it's because of the ATM, but it's not. And it's just downward pressure. So I think there's a lot of smart participants shaking retail out, using the common stock equity as a negative optics, and then using billions and billions of dollars of short interest on the stock to keep the pressure low. And so for all those reasons, I think it's cool that Saylor has taken his foot off the common stock ATM, and he's looking to drive that ATM higher. Clearly, that's the signal he's sending to the market. So, and even just a change, right? We needed a change. The MNAV was stuck very low. And so any sort of change is exciting moving forward, especially with the big catalyst on the horizon.
Yeah, I'm loving the no ATM uncommon.
Yeah, I would have to agree. And if you look at the MSTR IBIT, I mean, right now we're in a consolidation phase, but it's a very volatile chart. And you have to notice, like, the long-term pattern is we stair step up and then go sideways for, long periods of time, 8 months, at least. And that's an attempt to wear down patience, make investors, make retail sell, shake them out, and consolidate and buy lower. attempts from the market makers. So I'm personally bullish. I'm also long-term bullish. I mean, if you are looking at Saylor's figures for the 21 million, as I said before, that's 12 trillion in 12.4 trillion in 20 years, and that's 100x from here. And risk adjusted, I don't think you're going to find anything better in the market.
Mason, I'm going to be a billionaire before you. Mark my words.
Hey, at that point, I don't think the dollar will mean much. So
Yeah, facts.
Yeah, we're gonna play big
it's
bank,
about
little
it's
bank.
about who has the most Bitcoin, and that's important to remember here. If you're chasing fiat, you've already lost.
Should we do final
Oh
thoughts?
yeah, go ahead, Dan.
Let's do Adrian
Oh
first.
yeah, Adrian first.
You're muted.
Yeah, no, final thoughts. I still think overall we're in a great position. I think that Bitcoin is going to rip into the end of the year. I think that strategy is going to do very, very well at the end of the year. But I still think that with all of these other companies that are coming out right now, it is good to make sure that we don't get lost in all of that chasing the rabbit. And even with that said, continue to test your thesis when it comes to strategy. All things considered, if you look at where we were 2 years ago and then where we were a year ago and where we are now, I think that it's quite evident that strategy is working. So there's no reason not to be bullish, but bullish with perspective is always good. So we just have to sit on our hands and wait for the ride, man. So S&P 500 inclusion is likely coming. Bitcoin's going to do what it's going to do. We're all going to make the gains, and then we're just going to do it again, and then again, and then again, and then it's just a matter of how much gains that you make in time, and how long can you hold on to the ride. And I think that I really think we're in for some fun in the next coming months and years, and I'm excited to be part of it.
Right on. Go ahead, Dan.
Agreed. I think it's easy to get frustrated about price action and talk about price action as if it's a thing. And unless you're a momentum, like I entered strategy with a fundamental view on the equity. And that's the only way I've been able to make money in markets is by having a fundamental view and having a fundamental view and then positioning in that direction. So that's what we continue to do is have a fundamental view and change our outlook and update it on these leveraged Bitcoin equities. So I think getting angry at prices or becoming frustrated and then throwing your hands up is no way to invest because it's very reactionary. So we like to see where the ball's going and try to position in that way. If Bitcoin is still below its all-time high, strategy is hovering above what I consider its real all-time high of 420. If Bitcoin's at 450 and strategy's MNAV compresses to 1, I think there may be cause for concern. Until then, I'll be long calls, and I think the preferred equities are undervalued. So it's not. I don't think it's time to lose your shirt.
Oh yeah. Go ahead, Mason.
Volatility is gift to the faithful. Saylor says that, right? The main goal right now should be accumulation of Bitcoin, accumulation of strategy. This is my perspective. And there are some exciting companies that are up and coming, and I'm looking into them. And I think everyone should do their due diligence. It's going to get very loud. I think Bitcoin is. I feel like it's about to go higher. I think we can all kind of feel that, and maybe that's an indication that's not. But hold on to your shirt and make sure you're doing everything from a rational position, not driven by emotion, not driven by fear and greed. That's where I've gotten into the most trouble in the past, is by playing into my emotions and not going based off of what's rationally in front of me.
Oh yeah. For me, I think this discussion, while it seems like it's, maybe a lot of back and forth. Everything that this group is saying is intentional. Like even down to the thumbnails that Justin is creating. Like, he's putting symbolism in there, and he's putting like the zombies from Wall Street and the little nods to Texas getting a treasury, and all of that stuff. And the reason why I used Tsunami in the agenda for this onslaught of Bitcoin treasury companies and ETFs popping up is that if you've ever seen the videos of like a tsunami as about to hit, the the ocean actually gets sucked out into like away from the beach, and everyone's just standing around trying to figure out what's happening, and that just kind of feels like the way that Ivy is being sucked out right now. And when you see that sign happen, it's time to run away from the beach because the tsunami is coming. And so I think Bitcoin's gonna rip, Ivy's gonna come back, and it's gonna be a wild ride. So I think we're going higher. That's for you, Jeff.
Let's
So
go.
we have to say everything you've just watched, none of this was financial advice, although it may have been awesome.
Oh shit! I forgot to do the Tim video, didn't I?
I just
You know
did it.
what?
It doesn't matter.
Yeah,
Maybe tonight we were giving financial advice.
yeah, really, some
We
not financial
definitely
advice. Thanks, Mason. Thanks for keeping me honest, man. All right, with that, yeah, I think we're going higher, and thanks for everybody tuning in. See y'all.